Okay, we're live. Welcome, Weekly Roundup. It is February 9th, 2024. I'm Scott. That's Ben, HART Investment
Hello.
Group.
Yes,
And it is Super Bowl weekend,
that's
Ben.
right. Yes,
Happy Super
exciting.
Bowl weekend. Are you going to
Yep,
watch?
of course.
Are you going to tune in? You just watch for the commercials, though, don't you?
Not in Canada. We got
I,
the worst commercials in Canada.
I know. That's true. That's true. I'll try to figure out a way to stream it with no commercials. That's even better.
Yeah, exciting. It's gonna be a good game.
Yeah, here's hoping. Here's hoping.
Should be. I'm pulling for KC. How about you?
Yeah, me too.
Yeah,
Really, they're the underdog, so I usually go for the underdog. Yeah,
underdog. Even though he's been there for the last 5 years. I know his team's not as good as they say San Francisco's team is, but he's
yeah.
doing he's doing all right.
They've basically already crowned San Francisco, so I'd like to see that not happen. All right, let's get on with it. What it was a busy week for us here in the office, but what happened in the world? Was it a busy week in the world?
Plenty still going on in the markets in the world. Jobs, everyone paying attention to jobs and CPI and that I think seemed to get most of the macro attention this week. Markets were, I'd say, fairly choppy. Crypto had a good week again. But broad markets choppy. Some things did quite well. ARM, which is the semiconductor that SoftBank had taken private and then IPO'd again about 6 months ago, had some good earnings. Now the valuation's higher than Nvidia's valuation, so seems like a lot of momentum associated with that. The most interesting piece of that I saw is that someone put $20,000 on options, way out of the money options.
Mm,
And then ARM had their earnings, and that 20,000 became 1.5 million.
wow.
Yeah, that was the most noted thing that I saw this week in the options market.
Mm,
From a, I'd say, market otherwise, mixed earnings. Disney had good earnings, so they're up 15% this week. So that's good. We own that. And so some of those companies continue to have good earnings, still picking away at some of the names, like I mentioned before, Under Armour, Nike, things like that. So continuing to take advantage of stocks that have been a little bit beaten up, but I think as my view is the back half of this year, probably pretty good. So I'm trying to look for companies that haven't done super well, but should do well in the back half here.
gotcha. Gotcha.
Yep.
Okay. I had a question there, but now I've forgotten it already because I was reading headlines here. Okay. Well, we carry on and I'll come back to it. All right. What do we you got a bunch of slides for us today? You got two or three or seven? How many do you have?
Four.
Oh, must
Four.
have been a busy day. We have
Was a
four.
busy day.
It
Yeah.
was. It was.
Bunch of things going on.
Busy good though. Busy good.
Yeah.
It's good.
Just let me know when is it up there?
It's
Let me
up
know when we're
there.
ready. I'm ready to
It's
go.
up
Can
there.
we
Oh
see?
yeah.
We can see the scattergram.
Yeah, we can.
Okay,
Nobody knows what it
cool.
means, but you're gonna tell us. So
I love the scattergrams, but and they're always a breakdown of different things. This one is REITs, growth, small cap, value, large cap, and kind of the emerging markets, commodities, things like that, inflation linked. Part of why I think this is interesting because a lot of the attention comes. So if we look at here, like 2014, REITs were the best performer. You can go back and say what was happening in 2014. Obviously, rates were falling through that period of time, so REITs did quite well in that backdrop. And then as you look, growth struggled a little bit in 2015. You may recall through 2015, we had a bit of an energy crisis as well. Sorry, it did the best where commodities got crushed. Energy, we had a bit of a crisis. Oil and gas stocks, leverage into the end of 2015, kind of a worrying environment. I always like to look at these and just say, when you're looking for opportunities for the next 12 months, it tends to make a lot of sense to pay attention to the bottom quartile. And you'd say, okay, like in the case here of last year, commodities struggled into the end of 2023, and tips, which is inflation linked. This is generally the area I'd look at and say, okay, did commodities are commodities a little bit oversold coming into the end of year end? Case is true because we've seen a bit of a rally in commodities since then. But on top of that, you look at a company, for example, like Agrium or Nutrien, excuse me, Agrium, like it's in 1990, Nutrien, and obviously potash has had a difficult period through here. Maybe the company's starting to look attractive now. Stock's down significantly. Earnings look like they're starting to pick up. Looks like the commodities probably bottom. So these would be some of the things you'd look at and say, what's the potentially happen from here? And, easily in 2022, you look at growth got smashed, but then had a good year here. And so growth tends to really teeter-totter throughout this. So love these charts. So as we talked a lot about the government and what they've done and how the numbers, I've talked a lot about jobs, trying to understand really kind of the jobs market here. And so 2023 was this great chart from Hedgeye, the year of the big G. So real government GDP growth year over year. So while government spending accounted for 17% of the GDP, it contributed to 30% of the growth in GDP in 2023. And so, when you think about this, you got a slowing economy. How do we pick up that slowing economy? We stimulate it with government jobs and such. Same thing happened to Canada. So now what's the likelihood this continues from this point? I'd say quite low. And so just when we see the composition of the first half of this year, I'd say this will start to be a drag to the economic numbers. So interesting to see the dynamic and how that plays out. So this is just the fluctuation since over the last, I think, 5 years. And so as you see, as government kicks in, and then you start to see it start to correct, I think we're going to see on the other side of this, government spending is going to decline relative to the certain rate of change to the upside we saw most recently. And so as I think about, maybe I'll show the other one first, and then we'll come back to that because I think it's important to look at this. And this is, as I've mentioned, there's 4 types of economic activity. There's inflation accelerating, growth accelerating. There's inflation accelerating, growth decelerating. There's inflation decelerating, growth decelerating. And then there's the inverse of that, which is inflation decelerating, growth decelerating. So these are the different areas of economic activity we can have. So I know this chart's a bit busy, but really what it shows us is the couple of things. One, what's happening with growth. These are all the countries. So Argentina through the United States. So this is a G20. This section here shows us growth for the existing quarter and the next 3 quarters. This section talks to us about the signal strength. So how much are they certain based on the numbers that come in every day? So Hedgeye gets 164 economic data points into their algorithm every day. And then with that, we get any types of adjustments or revision to those numbers. Then the last section would be inflation, and then the signal strength of inflation. So these are the 2 major inputs. Why this is relevant is it gives you kind of a sense of what's coming ahead. And so if we look at the Canadian marketplace here, so we'd be Canada. So it says Q2 is growth and inflation decelerating together. So that tends to be bad for risk assets. And then on the other side of that, which I think is more relevant when you're looking at trying to buy, we'll say, riskier assets like stocks, is you see 2 periods of quad 2. So it gives you a sense of what you want to own in that backdrop. Then if you look at the United States, a similar setup here as well. The people ask me, well, how accurate are these? And then when we look at the numbers here, in the case of Q2, what's expected in Canada, the accuracy is presently at around 55%, which is quite low at the present time. So there's lots of data to come in still. But Q3 of this year is close to an 80% likelihood of that's going to happen. So, when you're investing is an art form. So you have to play the odds and the probabilities. 80% probability is quite high. So if we see this quad two in the third quarter of this year, you can start to plan for what you want to do from an investment implementation perspective. So this is how you look at it from a big picture there, and that's how you use the inputs. So if we look at the sector we're presently in, which is growth and inflation decelerating, what's one of the better asset classes to own in that backdrop, at least historically? What this breakdown is, it shows you how gold performs in the different quads. So 1, 2, 3, and 4. So the present period we're in here shows you a significant outperformance over other assets. So gold is a high quality asset that you want to own in the current environment, which is growth and inflation decelerating at the present time. So that's it. Try to spend a bit more time going a little bit more detailed in the individual areas. But if we look here, that's what it says gold outperforms in this backdrop. And hopefully that was a bit more clear and just on the explanation of what's going on from a market perspective right now.
All right, that's great.
Any questions on that Christmas tree?
Let's see if there's any questions, because I don't see any questions.
Okay, no problem.
In here.
Okay, I'll shut that down then.
There you go. We're back.
Mm-hmm.
Okay, so great job. I love the quads.
The quads, I know.
I love the quad updates. It's great.
I think it's good just to get a sense, because I do have lots of questions just about what's happening right now, because there is lots of, I'd say, negative headline feel. At least that's what I read and see. I don't know if you see anything else, but I get kind of a general negative headlines that's coming across and talking about and earnings and what's going on in China, because there's worry about contagion where the banks can't pay each other off, and if that happens, then what happens? We're starting to see commercial real estate pop up in the US as well, and one of the regional banks about a week and a half ago got into financial difficulty again. So I think it's worthwhile to just pull back a little bit and say, yeah, okay, I know this is the environment we're in today, but for investing is always about trying to see what's coming in front of us.
Yeah.
Yeah.
For sure. Okay, so what do we got to see? We got coming up this week? What are you seeing?
Well, tomorrow is Chinese New Year.
Yes.
Which is exciting.
That's right. It's the year of the what?
Of the dragon.
Oh yeah, that's right.
Any idea who a dragon is here?
Who? You?
Yeah.
You are a dragon.
I'm a dragon.
1976. Wow.
Yeah, so that's good. It's always exciting, new year for China. So that's coming up. But from a market perspective, lots still going on. Odds around rate cuts is starting to move around, so we'll continue to follow that. Market was a bit softer this week. I'd expect a little bit more softness. So looking for opportunities, put money to work. That's what I'm spending the time on right now, because as I say, I'm relatively optimistic on the second half, and trying to take advantage of things that just get dislocated in the market and tick away and start buying some things there.
Okay, great. Well, anything else before we get off and start enjoying our weekend and start getting the chicken wings ready for the Super Bowl party?
That's it. I think we're still taking a lot of meetings with people, talking about year-end results and starting to get ready for taxes and RSP and TFSA. If you haven't talked to us about those and you'd like to do it, feel free to reach out to one of us. We can make sure that happens. Yeah, generally, yeah, things are heading in the right direction.
Definitely. Okay, well, thanks for tuning in, and we will see everybody next week.
It's good. Thanks. Take care, everybody.